Nancy Pelosi has just made headlines by purchasing $5 million worth of shares in a major, fast-growing AI stock. This move has caught the attention of both Wall Street and everyday investors, as Pelosi is known for her timely congressional trading disclosures show her investment signals a strong belief buying in 2023 and 2024, and in net selling so far this about what she might know in 8 household name stocks that you probably not the only one making bold moves. Over the past few weeks, several other members of Congress same lawmakers have a decade-long track record to their beating both heads, targeting 5 additional AI companies that are making waves in the tech sector. These coordinated investments suggest a growing confidence in the AI industry's potential for explosive growth. This trend is definitely worth watching. Historically, members of Congress have managed to outperform the broader market, sometimes by a surprisingly wide margin. Of beating their trades often precede the S&P 500, raising questions about whether they have access to information to understand that gives them an edge over in this episode, we'll break down the macro backdrop. Calls to ban these stretched valuations are growing louder. We'll go through 8 stocks members of Congress are exiting one by one. We'll look at valuation growth and institutional flow signals for savvy investors. And I'll give you a quick intrinsic value check so you can decide whether to buy, hold, trim, or avoid. In this video, we'll break down the 6 AI stocks that Congress Remember, this discussion is for education starting with Nancy Pelosi's always do your own due diligence. Let's get started and exploring what these moves could mean for the future of AI investing. First on the list is Broadcom, a tech giant that's been making headlines for both its impressive stock performance and the high-profile investors taking notice. Recently, Nancy Pelosi exercised call options, giving her ownership of 20,000 shares now worth around $5 million. A significant move that's caught the attention of market watchers and political analysts alike. This trade, made on June 20th and disclosed on July 9th, is already up around 70% from her initial investment, highlighting just how quickly Broadcom's stock has surged in value over a short period. What makes this even more fascinating is that while Pelosi was buying in, other members of Congress were heavily dumping Broadcom shares, suggesting a sharp divide in sentiment among lawmakers about the company's future prospects. Broadcom's stock has had a phenomenal run, up 61% in the last year, and now trading near its all-time high of $281, making it one of the standout performers in the tech sector. Wall Street remains bullish, with analysts giving Broadcom a strong buy rating of 4.6 out of 5, reflecting widespread optimism about the company's growth potential and future earnings. However, despite all the excitement, the stock appears severely overvalued at current levels, raising concerns among some investors about whether the rally can continue. Its forward price-to-earnings ratio of 38 is well above its 5-year average of 18, indicating that investors are paying a hefty premium for future growth that may not materialize as quickly as expected, and its dividend yield of 0.9% is significantly lower than its historical average of 2.8%, making it less attractive for income-focused investors despite its recent gains. Despite the overvaluation signals, institutions are loading up. In the last year, they've purchased $217 billion worth of Broadcom stock, compared to just $38 billion in sales. In the second quarter alone, buys outpaced sells by a staggering $1.4 billion to $226 million. Our own intrinsic value model, using a 20% growth rate, puts the company's fair value at $258, suggesting it is currently trading at a premium. Wall Street's average price target of $296 implies a limited 8% upside. The next stock that members of Congress have been buying is Taiwan Semiconductor Manufacturing Company, or TSM. Up 25% over the last year and trading near its all-time high of $238. TSM has strong buy ratings from both Wall Street and quantitative analysis. However, like Broadcom, it appears overvalued. Its forward price-to-earnings of 24 is above its 5-year average of 21.9. And its 1.4% dividend yield is below its 1.7% average. Institutions have been bullish, buying $25 billion worth of shares in the last year, compared to $18 billion in sales. In the second quarter, they ramped up their buying, with $178 million in purchases versus just $48 million in sales. Our intrinsic value model suggests a fair price of $244. giving the stock a 5% margin of safety at its current price. Wall Street's price target of $245 implies a 7% upside. Marvell Technology has been a laggard, down 34% year-to-date and trading towards the lower end of its 52-week range. This underperformance has created a compelling value opportunity. The stock's forward price-to-earnings ratio of 24.5 is well below its 5-year average of 35.1, signaling a severe undervaluation. This is consistent with its performance chart, which shows the stock has remained in an undervalued space for most of the recent period, even as its intrinsic value has been increasing. Institutions have been net buyers, with $13 billion in purchases versus $10 billion in sales over the last year. In the second quarter, they continued to add to their positions. Our intrinsic value of $85, derived from a 17.5% growth rate, gives the stock a 15% margin of safety. Wall Street is even more bullish, with an average price target of $91, representing a 25% upside. ASML, a critical player in the semiconductor ecosystem, is down 25% over the last year but up 16% year-to-date. The stock is trading in the mid to lower end of its 52-week range, and like Marvell, it appears undervalued. Its forward PE is below 30, compared to a 5-year average of 34. In the most recent quarter, institutional buying has ramped up significantly, with $45 million in buys versus just $6 million in sales. Our intrinsic value for ASML has remained firm at $1,049, derived from a 14% growth rate. This gives the stock a 20 to 25% margin of safety at its current price. Wall Street's price target of $900 suggests a 12% upside. Members of Congress have also been loading up on Cisco Systems, a tech giant that's been a staple in the networking industry for decades and remains a favorite among institutional investors and lawmakers alike. The stock is up an impressive 45% in the last year, outperforming many of its peers and drawing even more attention from the market. It's currently trading near its all-time high of $70, a level that reflects both investor optimism and the company's strong recent performance. Despite this surge, many analysts warn that the stock is showing clear signs of severe overvaluation, raising concerns about its future upside potential. Cisco's forward PE ratio now stands at 17.2, which is notably higher than its 5-year average of just 14, suggesting the stock may be priced for perfection. On top of that, its dividend yield is lower than average, making it less attractive for income-focused investors. However, despite these valuation concerns, institutions remain extremely bullish on Cisco's prospects. Over the past year, they have purchased nearly double the amount of stock they've sold, signaling strong confidence in the company's future. In the second quarter alone, institutions bought a staggering $1 billion worth of shares, while selling only $59 million, highlighting just how much faith big money has in Cisco's continued growth. Our intrinsic value model puts the company at a fair value of $67, suggesting it is currently trading right around its intrinsic worth. Wall Street sees limited upside of 4%, with a price target of $71. The final AI stock that members of Congress are buying is Advanced Micro Devices, or AMD. Down 20% in the last year, but up 21% year-to-date, AMD is trading at a 58% premium to its sector, with a forward PE of 38. However, this is a slight discount to its own 5-year average. Institutions like members of Congress have been loading up, with $1.3 billion in buys versus $445 million in sales in the most recent quarter. Analyst sentiment has been volatile, with HSBC issuing a double downgrade at the beginning of the year with a $110 price target, only to upgrade the stock to a buy with a $200 price target just days ago. Our intrinsic value model, using a 25% growth rate, puts AMD's fair value at $137, suggesting it is trading at a slight premium. The average analyst price target of $140 implies a 4% downside. The recent buying activity from Nancy Pelosi and other members of Congress in these 6 AI stocks provides a fascinating look into where influential investors see opportunity. While some of these stocks appear overvalued, others present compelling value. As always, investors should do their own research, but the trades of those in Washington offer a valuable signal worth paying attention to.